Hello everyone, this week's focus is Bitcoin. With around 40% drop from its record highs around $126,000, we can see a clear sign of Bitcoin entering a technical bear market. Let's check the charts. By definition alone, the move puts Bitcoin firmly into bear market territory. But the deeper story lies in what the technicals and on-chain data are telling us now. As long as Bitcoin remains below the $90,000 level, the advantage clearly stays with sellers. A key level reinforced with 20, 50, 100-day moving averages zone. That's a strong signal that the broader trend has turned lower. Also, there's two key risks waiting on sentiment. First, the situation around strategy, which has accumulated a very large Bitcoin position over recent years at an average price close to $76,000. So any sustained move lower keeps the exposure firmly in focus. Second, US spot Bitcoin ETFs, which for the first time since their launch in 2024 are showing small average losses, increasing the risk of renewed selling flows. Technically, momentum remains weak. If we check the RSI, it's deeply oversold below 30, close to historical extremes. But importantly, the MACD, it's still pointing lower, suggesting that the downside momentum has not yet fully played out. On-chain data shows that short-term holders' average entry was around $90,000, now with an average losses of close to 15%. Zooming out, we see a current formation that is familiar and similar to previous cycles, especially the 2020-2021 structure. The similarities are becoming more visible. If history offers any guidance, Bitcoin could continue to drift lower toward major on-chain support near $60 to $50 zone, close to its realized price. But on the short term, Bitcoin has seen an aggressive break below the local uptrend, and a retest of the $90,000 area remains possible. However, as long as Bitcoin trades below that level, the trade bias stays bearish, and any rebounds are likely to be corrective rather than trend changing.